Hello to all the Web3 enthusiasts out there. This is Max speaking, and welcome to the new exciting episode of Synopsis. Our today's guest is Sal Ternullo from SVRN. Hi, Sal. How are you today?
Good. How's it going, Max? Thanks for having me.
Yeah, always a pleasure to see new guests, new experts here. And today we're going to make a really deep dive into your project, into what you are building. And we have so many questions to go. So let's get straight to the action, if you don't mind.
That sounds good. Look forward to it.
And of course, to begin with, since it's your first time here at Synopsis, let's start with the introduction. Could you please go ahead, introduce yourself and your journey from State Street at KPMG into Web3, and tell us what led you to launch SVRN and focus on building a near-based digital asset treasury.
Yeah, happy to do that. So thanks again to you and the team for hosting me today. Obviously, my name is Sal Ternullo. I'm the CEO of SVRN, which is the recently launched Treasury company focused on near accumulation and infrastructure development around the network. As you alluded to, I've been in the industry my entire career, and I look at this opportunity as kind of the confluence of these different chapters of experience, starting at State Street on the institutional side, focused on emerging technology risk, with regards to machine learning approaches and permission ledger systems largely. It was a great opportunity to look at hands-on keyboard, applied research and development around those two technologies, but with the lens of what does it take to bring these things to highly regulated financial institutions. I left in 2018, joined KPMG, where I had a platform to found and build an advisory business in the US market focused on public blockchains and crypto as an asset class. I actually coined the name or the term institutionalization of crypto assets in a white paper with Coinbase in 2018. But that business scaled over 3 years, largely focused on cybersecurity, thinking about custody deeply and serving a number of regulated exchanges and custodians in the US market. And then a lot of work in the AML compliance and regulatory licensing space as the industry was growing up. I left in 2021 and joined the buy side and have been in venture capital over the past 5 years, managing 2 early stage venture funds, which is how I became quite close to the near ecosystem. We're investors in the protocol and the native token out of both venture funds, and then have invested in about a dozen projects across the ecosystem. So I've held the view for a very long time that Near's technology was uniquely suited to both scale, but provide an exceptional user experience that was absent and lacking in many other different ecosystems. Just basic things like how do you bring traditional user bases into a frictionless experience where they can really understand and feel the promise of the value drivers or attributes of public blockchains, ownership, sovereignty, privacy. And so in about August of this year, I was speaking with a number of folks on the executive team at the foundation about their efforts in the space. And ultimately, they flipped the switch on me and said, hey, we're interested in starting a recruiting process for a CEO of a project that we're building that will focus on asset accumulation around Near, with the objective to break the gap to public markets investors, both retail and institutional, and really tell the story around Near. And so it took a little bit of time back and forth with Ilya and team, and ultimately landed with conviction that Near's technology is one of the most mispriced layer one assets based on fundamental analysis, user adoption, technology design, and feature set. And on a forward basis has one of the most promising and exciting outlooks, with a real point of view on how to solve the centralized risks associated with AI, and then apply them in the context of a user-owned paradigm where I can control my own agent, have privacy and confidentiality around the interactions with that agent, and ultimately unleash it to interact in the real economy on my behalf, which has been most recently, kind of taking up with Near Intense. So we've been at this now for about 45 days, just over, a month and a half since we had the public announcement on the PIPE transaction. We made an incredible amount of progress, and excited to share more with you today.
Well, thanks for sharing. It sounds like a very interesting story behind, and actually the project itself is also extremely interesting. And today let's create some guide through the ideas and technologies you have there. And well, let's begin with some I would say, fundamental things to break into smaller details. So you've described SVRN as an evolution from passive treasury strategies to build operating infrastructure. Yeah, that's a fundamental shift for sure. And could you tell us what does that mean in practice?
Yeah, there's two components of this. One is as it relates to the actual Treasury mandate itself, and then the second, which is the target state business that we're developing today, really focused on delivering infrastructure to power near protocol. So in that order, on the first side, one of the key advantages that Treasury companies offer relative to traditional exchange traded funds or ETFs is the idea of active versus passive exposure. And so in an ETF product, you are holding the underlying, you may be getting yield once the SEC approves staking, or in jurisdictions where staking behind ETFs or ETPs is already blessed by the regulators. But ultimately, there's no participation in any type of yield or hedging strategy, leveraging derivatives and options markets. And so, in the context of kind of the first piece of active treasury management, we are engaging in different option strategies that are both enhancing the yield profile of the vehicle, as well as introducing downside protection, where when these markets have volatile moves downward, we're protecting principal and generating cash to facilitate continued accumulation of NEAR. But more exciting is really the second phase of what we're doing around the infrastructure business. So NEAR stands at kind of the precipice of this major shift in the network design to integrate both MPC signing nodes or multi-party computation in the context of NEAR intents through a product called chain signatures, where there are a number of different nodes on the network that are participating in transaction signing, facilitating seamless cross-chain network integration. And so you can swap using NEAR intents, native Bitcoin to native ETH, native Bitcoin to native Solana. And over the past 90 days, you've seen a viral uptake in this feature set, really proving product market fit and eliminating the need altogether for bridges, which obviously introduce a number of risks on the cyber side. We are becoming an infrastructure provider for chain signatures. And so we'll be deploying an MPC node and participating in signing quorums that facilitate NEAR intents over time. And then the second piece on the infrastructure business is actually the longer term view of what we'll do here in scaling decentralized confidential machine learning, or effectively the confidential compute network that NEAR is delivering. And so NEAR Foundation has incubated an infrastructure kind of node specification that integrates NVIDIA's confidential compute architecture with Intel secure enclaves and facilitates LLMs running inside of trusted execution environments, where you can get cryptographic guarantees over confidentiality and privacy of both the data that's being used to train a model, as well as in inference workflows, and then ultimately demonstrate that the model has run accurately. So introducing confidentiality, privacy, and verifiability around models. And the infrastructure that's required there is not consistent with the traditional validator specification for NEAR. And so in these two regards, we're delivering infrastructure to market and then monetizing that infrastructure in native NEAR. So it all ties back to this asset accumulation strategy, but really does so in what I describe as a network aligned way that powers the roadmap from where we are today with NEAR protocol to where we are moving and solving the future of user-owned AI.
Well, pretty detailed, I would say, and seems like a great beginning of creating this walkthrough guide for your channel, project. And of course, this discussion cannot be but NEAR-centric, so to say. So the next question would be also very general, but very important for the entire picture. So as far as I know, you are targeting 10% of NEAR's total supply and currently hold about 4.2% of that. And the question is, why NEAR specifically, and what does holding that level of a protocol enable strategically?
Yeah, so you're correct on those points. We're about 4.2% ownership stake in the network with the objective to achieve 10+%. The premise of these vehicles in the treasury space is all wed to the underlying asset. And so in our case, and in my case, I've held the view that Near as a layer one network token is mispriced in public markets at spot today based on user adoption, the technology design, and a number of other fundamental analysis points. And so we see the opportunity through SVRN to actually capture the market mispricing and express that value captured to our shareholders through our stock, which again is ticker SVRN. And so there's a number of reasons why we believe this to be the case, but it really stems from Near's embodiment of the best trade-offs to facilitate a scalable architecture with a good user experience, and at the intersection of the two most important technology paradigm shifts of our time, being AI introducing this new interface to computing and blockchain enabling trust, confidentiality, and verifiability around models. And all of these issues are kind of bubbling up on each respective side and coming together with a technology that's designed to solve them. So we're super excited about Near, have been for a long time, and I think it's their moment to shine in the market with recognition, specifically over the traction that we've seen with Near Intense.
Well, thanks for clarifying. It sounds pretty much bullish for Near, and actually, I 100% agree. Here in the world where everyone tends to build something on Solana, it's like kind of a fresh brief, I would say, and we're taking more detailed view on what's going on. Could you please walk us through how using Treasury yield from staking to fund infrastructure development works, and why choose this model over other forms of traditional fundraising?
Yeah, it's a good question. So as we were going about the process of the initial transaction, obviously the core mandate is to accumulate Near, reach the 10% plus threshold of the total network supply, but also become an active participant in the network over time. And so as we're looking at how we can utilize our balance sheet to fund the build out on the CapEx and equity investment side around the infrastructure business, it made sense for us to scale that business utilizing the yield that is generated from both staking, liquid staking, and then the option strategies that I was mentioning previously. It's a unique element around treasury companies where obviously they have these large balance sheets and are generating significant income in the form of native tokens. And so rather than lead to a place where we raise outside equity capital to fund CapEx and build out on the infrastructure side, we're leveraging the yield that's generated from the existing balance sheet assets, at least a portion of it, in conjunction with future debt financing opportunities, specifically ring-fenced to the infrastructure business. So I think it's really kind of the expression of how do you leverage a treasury company to fund an infrastructure business. And the approach that we're taking, I think, is first to market in doing so.
Well, awesome. And since we have the basics now, let's talk about what you are actually building with that treasury. Could you please tell us what is Agentic AI and why does it need decentralized infrastructure?
Yeah, so on the Agentic AI side, I'll kind of paint a picture of what we view the future to be, and then talk about how Near's technology kind of sits behind that and enables this outcome. So imagine a world where you're taking your morning commute to the office and your agent Max is serving you, kind of interacting along your journey. You're getting off your train, switching to the next train line, and that train's delayed. But you want to have your coffee ready for you when you get off your final stop as you're approaching your office. Your agent is operating in the background, identifying a delay in your train schedule, interfacing with the coffee shop and the merchant agent that sits on that side of the equation, and identifying exactly when you're 6 minutes or 5 minutes away from the coffee shop to have your morning brew prepared for you, hot and ready, the moment that you walk in the door. It also facilitates the payment that sits behind that interaction and does that frictionlessly in a way where you never even have to press checkout here. You just know that every morning you want to have a coffee when you get off the train. And so the way in which you enable an experience like that from a user or consumer perspective is using the building blocks of agentic commerce. In the context of Near, that is both the DCML, or decentralized confidential machine learning component, where you're running this agent that you can trust that operates for you, maintains privacy of your location data as you're moving through the city. You may not want to share your real-time location with third-party servers or models like centralized providers. You may want to have control over where that geolocation data sits. And so DCML provides you confidentiality and privacy over that information, but also gives you the ability to identify exactly when you're 5 minutes away using third-party services that can tell you, where am I on this train at this moment in time? And then ultimately, as you're walking in the door, facilitate the payment to check out, which would be leveraging the payment rails that have been built out with Near Intents, probably facilitating the transaction initially in stable coins to settle at the lowest cost possible with the fastest fidelity, which in Near's case is 1.2 seconds. And then for the merchant, if they choose to take that payment in fiat, they can choose to do that on their end and have their agent facilitate kind of the swap between either a US dollar or other fiat stablecoin to their native fiat currency. And so you kind of go from this user experience today where if you want to order a coffee through Starbucks and try to time the order so that when you get off the train, you're going to be, your coffee's going to be ready for you. This completely removes the need for the human interaction in that loop and gives you this trusted and verifiable way to make sure that every morning as a consumer, when you're on your approach to the office, you have a hot cup of coffee waiting for you at your favorite local place. That's kind of a basic expression of what we mean, but that extends across a number of use cases, both consumer and enterprise, both of which Near's technology uniquely enables.
Well, thanks for the great example. And this actually sounds crazy, I would say. And maybe a year or at least 2 years back, I would say that sounds fantastic, but I like how fast the tech is emerging, and we can really discuss these concepts as something really close to us, but not just a concept out of nothing or just a fantasy. Well, and we'll be looking forward to see these concepts coming to life for sure. And you talk about AI sovereignty, as I know, as a core principle. What does that actually mean, and why should people care?
Yeah, I think this gets like why do you care about control, ownership, sovereignty of models and AI has been increasingly expressed in the risk events that we've seen from centralized model providers, which to date have been relatively limited, few and far between. But ultimately, when you're interacting with central servers that are running models on your behalf, as a user on a chat interface, all of the interactions that you are typing and voice delivering to those models are ultimately stored on third-party servers. Over time, that creates a massive information asymmetry where they know an incredible amount about you, potentially better than you know yourself, and can ultimately monetize you in different ways, which is really the Web 2 paradigm and kind of the why did Web 3 exist. So as we think about AI sovereignty and user-owned AI, it's really thinking about a world where you build agents and models that serve you as the user and protect you in doing so in terms of privacy and confidentiality. So we look at this as kind of like the extension of core Web3 principles of sovereignty and privacy, now thinking about them in the context of AI. And with regards to Near, the specific vertically integrated technology building blocks that are required to bring that future vision to reality today.
Oh, got it. Sounds awesome. And I had a few questions prepared here, but with a great example of like almost everyday routine with the coffee and stuff like this. Also asking about why Near. I think we can remove a few of them and jump into the next one, which is actually how does the Near AI cloud fit in what you are building?
Yeah, so Near AI Cloud is really the foundational building block that enables confidential inference in the context of these interactions with models. And so Near AI Cloud is basically a product suite that allows for the user traffic to flow from a consumer experience like a chat application and private chat to a model that's hosted inside of a trusted execution environment with secure communication between those 2 points, and ultimately allowing the user to have a guarantee that their interactions, chat or voice, are not being stored in some third-party database, but actually being housed inside of this trusted execution environment. And then also allowing the user to verify that the output of the model and that interaction was accurate and as intended. And so Near AI Cloud really is thinking about confidential inference and how do we protect users who are interacting with models. And the building blocks behind that are kind of the DCML and trusted execution that we were speaking about.
Got it. Thank you. And we'll speak a little bit more about the confidentiality that comes with Near, but a little bit later. And the question for now is, could you please walk us through the role of Near Intents and tell us how does this architecture enable AI agents to operate autonomously?
Yeah, so in the current context, Near Intents has been largely utilized by retail consumers. We've seen volumes skyrocket north of 7 billion in largely cross-chain asset swaps. So that example of Bitcoin to Ethereum or Bitcoin to Solana, or more recently, Bitcoin to Zcash or a stablecoin to Zcash, and doing that in the lowest cost manner possible. But this building block of Near Intents is not just applicable to retail users, it's also applicable to institutions. And then over time, which we are now seeing several projects live utilizing agents and intents together, it becomes this ubiquitous, unified liquidity layer for agents to interact in the real world and in commerce on your behalf. So we take that example of kind of the coffee shop and the train that I was walking through. The agent and Near AI Cloud and DCML are the building blocks that are facilitating that agent to run on your behalf, Max, and confidentially know where you are over time. And then Intents is the building block that actually says, hey, Max is 4 minutes from his coffee shop. Let's execute the purchase and transaction associated with that coffee. And then on the merchant side, it may be the mechanism that says, hey, our inventory for this type of coffee bean is low. We need to express the intention to purchase or procure additional coffee beans and then facilitate the payment associated with that procurement process. And so Near Intents is really the payment rails, whereas Near Private Cloud, Near AI Cloud, and DCML are really the AI rails that are powering agentic commerce.
Got it. And a little bit more about confidentiality. So Near's approach involves actually confidential computing for privacy. Could you add a little bit more info on how does that actually work and why does it matter for AI agents handling sensitive data?
Yeah, so the confidential compute architecture is leveraging two different core components. One is a GPU and the other is a secure enclave, specifically around NVIDIA's confidential compute architecture and using Intel TDX, which basically allows you to run a virtual machine inside of a confidential environment or a trusted execution environment, TEE. When you're running the model inside of these environments, you can actually get guarantees from the hardware that the model is in fact running inside that environment and indeed is protecting your information as you're interacting with that model over time. And so it's really kind of wrapping the future of what we expect to see as well in centralized environments into a decentralized environment that also allows you to transact seamlessly in the real economy. Why do people care about privacy? I think those that reside in the European Union probably can appreciate this more now than ever before with the recent changes to legislative approaches around monitoring and surveillance of chat applications, right? Privacy is not just relevant to people who are doing illicit things or participating in, things that are outside laws and regulation. Like privacy is a fundamental building block to having economic freedom and really having sovereignty and control over your life and your future. And it's being eroded every day by nation states and governments. And this recent kind of evolution in the EU landscape is a perfect expression of that. And so as we move towards this future where agents are operating on our behalves every day in every different aspect of our life, we must have privacy as a foundation behind that. And if not, you can inevitably see how the robot in your home that has full auditory and sensory kind of viewpoint into your personal life inside of your home, you may want to have privacy around those interactions. And you may also want to verify that that robot is doing what you intend it to do. And so, I don't think the trend that we've seen in the last kind of 90 days around privacy reemerging as a theme in Web3 is really going anywhere. I think it's probably extending further to think about how privacy enabled by Web3 technologies extends across different types of user experiences, both mobile applications and just general internet interactions.
Awesome, thank you. And to add one more important detail here, so could you tell us what's the difference between verifiable privacy and what companies like OpenAI or Google offer when they say AI is private? So what's the main difference here?
Yeah, so generally speaking, when you're using a centralized model provider, you're signing up for terms of service based on the subscription level that you're signing up for. And so generally speaking, in those terms of service, if you're paying for a premium subscription, you may have some type of contractual term that says, we will not train our models on your interactions. However, regardless of whether they train them, the information is still stored on those third-party servers. You can imagine a directional move where if there are cybersecurity events that compromise the data that they're storing on behalf of users, they may try to evolve towards a place where they're actually not storing that information. But in doing so, they lose context from the user perspective, which is super important to provide these great personalized experiences, like the example I was sharing with you around your daily coffee routine, and all of the context around that is informing the model and the payment execution for you to have that coffee every day. And so I think you will see centralized model providers continue to try to retain the information that is derived from your interactions with those models, even if they're not training their models on that information and providing you contractual guarantees. What verifiable privacy introduces is I, as a user, don't need to just trust that they won't train their model on my data or trust that they'll store my data securely. I can actually verify cryptographically that the data does not leave a trusted execution environment and the hardware is actually producing those cryptographic guarantees. So I may, as a kind of common consumer, I may not care about the actual cryptography that's working there. I may want to see some type of guarantee in my user experience that the communication is secured by and stored in hardware, Intel and NVIDIA infrastructure, and never leaves those environments. But I still get the benefit of context of all of my historical interactions with models over time to give me the best personalized user experiences that I possibly can have.
Got it. Thank you. So, sounds extremely reasonable, I would say, and trust is good for sure, but having an opportunity of verifying your own privacy is a way better concept. And we have a pretty detailed and I would say extremely positive and an interesting picture of what's going on and what should we expect in the nearest future. And sounds extremely positive. Why is this potential not unleashed yet fully? What is the biggest obstacle preventing this agentic AI infrastructure vision from scaling right now?
Yeah, I think it really just takes time to build the infrastructure and integrate these technologies together. You've seen a massive kind of sentiment shift towards confidential computing in the context of AI. And what Near is building is really the first mover to market in decentralized confidential compute, although there are others moving in kind of a similar timeframe. So I really just think it's a question of like how long, what is the lead time that it takes for these implementations to go live, and then ultimately unlock the user experiences that I was describing. And that's really the SVRN mission here, is not only to facilitate this treasury strategy and accumulation of near, but also to accelerate the delivery of the infrastructure that's required for us to have private, verifiable agents that are operating in the real world and in commerce on our behalf.
Got it. So actually, the main question is a matter of time when it comes here, and thanks for your contribution into bringing this future a little bit closer to us. So for sure, we'll be tracking your success, and I hope that in a few months or so, we'll meet here again to discuss what's been achieved since the project is maturing, and it has just been launched, so to say. And actually, I think that things will be accelerating. And before we finish today's discussion, I think it's a great time, and also the time of the year, to address directly to the audience with some piece of advice, or maybe call to action, or maybe even a New Year's wishes, as this gentleman is getting closer and closer. So, whatever you find useful for people to hear right now, please go ahead with it.
Yeah, I mean, I think, in observing the market and coming into this conversation this morning, I remind myself always that the best opportunities in markets are generally when the common perception is fear. And so I feel from the conversations I've had with a number of fund managers, investors, and institutions, there's never been stronger fundamentals around this asset class from a regulatory perspective, from a nation state level adoption, the introduction of new passive vehicles in the context of ETFs and active vehicles in the context of treasury companies. And then on a bottoms up basis, a saturation and state of user adoption that is just wildly different from where we were in 2022 or even before that. But when you look at prices today, I see opportunities. And so I think my piece of advice would be that when you sense fear, it generally is an opportunity, and you've just got to find yourself in a space where you don't fall into also being in the fearful state. And so I would take you up on that offer, Max. I'd be excited to come and share the progress that we've made maybe in Q2 of next year and talk about the state of the infrastructure build. And I think when we look back on that time frame, near will be in a wildly different position in terms of market capitalization. So we're excited to be a part of that journey and help drive near towards the mainstream, and frankly towards Wall Street and institutional investors.
Wow, sounds awesome. And as I said, always welcome here. And yeah, thanks for a great advice. Don't miss the opportunities, guys. Things are usually, not always, but pretty often, I would say, are not as negative as it might seem. So the opportunities might be hidden even behind the fear. So yeah, don't miss the big things. And for that, of course, follow Sal, follow SVRN, follow Synopsis, not to miss these big things coming. And yes, if you have any comments after this, I would say pretty much detailed, at least for the first time discussion, so drop it in the comment section and show your thumbs up to see Sal in more episodes sooner than later. Well, and for today, that's pretty much it. Thank you very much, Sal, for coming. Wishing you all the best with the project, and we'll be tracking your success. Thank you.
Thanks, Max. Appreciate it.
And yeah, bye-bye for everyone. Stay tuned. See you in more episodes.